It's not exactly an original short position, is it? When I think 26% of the free float is out short. So walk me through it.
Well, that's why we decided to disclose the position. The vast majority of companies that Safkhet is short, has been short, or will be short, we won't disclose to the public. But we've spoken publicly about Tesla before, and we've really sat out on the sidelines because so much of Tesla's valuation came down to the allure of the Tesla brand and consumer sentiment and these vehicles and the sustainability argument. But we've seen as more Teslas now roll onto the roads, and more data coming out from customers, the sentiment is inflecting negative. We believe that expectations are certainly not aligning with reality, and because of that, we feel more comfortable initiating a position.
So one thing that I'm struck by is how expensive the short position is, because so many people are thinking negatively about the company. How long can you hold on to a position like that before you have to sort of abandon it, especially if there isn't necessarily a massive near-term debt maturity or some kind of catalyst for some kind of mass devaluation?
Well, you bring up a great point, because that's another reason why we've sat on the sidelines to really see how the fundamentals play out, what is their ability to obtain financing, and deal with the massive debt load that they currently have. And what we saw this summer was finally vendors coming forward and saying that they're not getting paid by Tesla. We see suppliers are taking liens out against the company. We see some of these suppliers actually filing for bankruptcy. And this is a huge risk. We saw it happen with Valeant, but Valeant didn't face the same sort of supply chain issues that Tesla does today. Because a lot of Tesla's supply chain is single source. And we question the ability for Tesla to actually deliver on their promises to their customers when they're on the brink of potentially a massive supply chain disruption. We see very little contingency planning, and we also see executives from the supply chain department departing in recent weeks and months.
So you talk about the reality not quite meeting the stock price. We have had a big move from the highs of 380 down to 267. How much of what you have just said is not in the market, is not in the price?
We don't believe any of it is. Tesla wants to be viewed as a car manufacturer, but against the valuation is certainly not in line, and we don't believe that the runway that they currently have to grow into their capital structure is enough. The goalposts keep moving, and if investors follow carefully the promises that Tesla itself is making every time they make a public statement or a tweet, those goalposts keep moving, and it's always incremental, but sometimes those incremental changes turn up to be material changes, and at some point you're pushing those goalposts off a cliff.
You made your name with a wager in the healthcare industry, and I'm wondering why go outside of something that you've really specialized in for a while? Why into autos?
I specialize in short selling, not necessarily just in healthcare. Healthcare is a great place to find good shorts because there's a lot of liquidity. So you can find companies that are misrepresenting, they're gaining capital to put into products that perhaps are fraudulent, or there's bad science behind them. So it's a good place to start. But certainly as a short seller, it's not the only place to look.
So I do have to ask you about Valeant. You still have the short on Valeant.
Yes.
That stock has done pretty well through 2018. I'm wondering how expensive that gets. Bill Ackman fell in love with the other side of the trade. I think it's worth me asking and pushing you a little bit. Do you think you've fallen in love with the other side of the trade?
I don't believe we have. I still have high conviction that Valeant's assets aren't worth the debt, and over the long term, their ability to generate cash to actually maintain that debt load it's certainly not sustainable. So we have a position in Valeant. But as a concentrated short-only fund, we're making big bets. And conviction doesn't just come from our belief that a company is fraudulent or engaged in misrepresentation and bad business practices. It also has to do with the timing and the investment horizon. And with Valeant, we see that the timing is certainly not there. We have less clarity. So we have a smaller position. And same thing with Tesla. We see their near-term struggles as far as what might happen as far in Q3. They may be able to use one-time levers and manipulate working capital to post a profit in Q3. They may be able to refinance, and all of those could hurt us on the upside.